When some stocks dump 30%, it means the fundamental thesis is dead. But when a monster like this drops 30%, it's simply because its previous vertical rip was pure insanity. AXT is heavily the latter. At Friday's close, XT wrapped up the session at $97.18, logging a solid 10% plus daily rip. It looks like a massive green candle, but if you only focus on this one-day bounce, you are completely missing the plot. If you trade these hyper-growth tech runners, hit the link in the description. The biggest asymmetric P&L always opens up when a high beta leader experiences a massive, violent flush. The most shocking part about AXT isn't this 30% correction, it's the historical tape. From April 2025 to now, the stock ripped 126 times. Yes, not 126%, but 126 times. That is an absolute legendary run. So when this pullback hit, retail tourists felt like the sky was falling. But veteran players on the streets saw something completely different. A long overdue, healthy, technical mean reversion. This flush was fueled by a mix of macro headwinds and that broader tech black swan liquidation. When market sentiment turns into pure trash, high beta growth names are always the first to get slaughtered. But let's look under the hood. What does a XT actually do? And why did it put on such an unhinged, historic macro run? Simply put, software names train the AI models, fabless chip designers design the silicon, but AXT supplies the critical raw materials required to physically manufacture those advanced chips. If this AI expansion is like building a massive skyscraper, NVIDIA sells the luxury penthouses, TSMC does the actual construction, and AXT is the whale supplying the core steel and concrete. They specialize in compound semiconductor substrates like gallium arsenide and indium phosphide. Sounds complex, but high-speed optical comms and AI hardware infrastructure literally cannot exist without them. As long as this secular AI feast continues, demand for upstream materials remains bulletproof. No matter which tech giant wins the AI war, they all have to pay the toll to the raw material suppliers. Scanning the chart, the price action has dipped below its weekly BDI line. Paper hands see this breakdown and panic. Institutional buyers see this breakdown and start getting incredibly excited. For structural trend runners, the ultimate entries are never found when retail is chasing fresh highs. The premium risk to reward windows always open up after a textbook, violent institutional shakeout. We are watching closely to see if this 30% washouts marks the macro bottom for the next leg up. To get our exact watch lists and sector plays, hit that link in the description and join our desk inside.